We're going to do 2 shows of Money with Friends today, just so you know, in your retired life, what you're doing today.
Let's do it.
Seriously, we're so happy you're here. I'm all messed up from the early hours, but somehow, I don't know. Do you feel like that 1 hour of daylight savings time, does it change? Does it affect you?
The 1 hour doesn't really affect me. It's more the waiting in line for 3.5 hours to vote early yesterday that did it.
Oh, I'm so happy you voted early. I don't know. I know people are paranoid about their votes being counted and all that, but I voted by mail. I just didn't want to deal.
Yeah, it was part of moving states, and I didn't get my act enough together to get a mail-in ballot, and so I had to show up in person.
Well, I'm glad you did. I hope everyone out there watching us, listening to us does. As you guys can see, if I did the preview correctly, we've got 2 topics today. We're going to be taping 2 shows. We're sort of trying to counter program the election. We're not going to talk politics, but our first story is going to be about kind of keeping calm. So if you have questions for Grant about that, definitely post it in the chat on whatever channel you're watching on YouTube, Twitter, or Facebook. And then our second story is going to be about Warren Buffett and what stocks he's held the longest. We actually put out a quiz, Grant, asking people what they thought was his longest, the stock that he's held the absolute longest. And so we'll reveal the results of how our money friends did. And I was not at all surprised. So with the results. All right. On that note, let me go and click record on our backup recording. Okay. Now I have to find you again. All right, let's do this. So this is the show that's going to go out, oh my gosh, on Election Day, November 2nd, Tuesday. Here we go. Okay, friends, it is Election Day. Are you stressed out about your investments? You are not alone. Our guest co-host, Grant Sabatier, is here with all that worry, with why all that worrying may be overblown. But you know what? If you're having it, he's going to have advice on how to handle it. It is Tuesday, November 3rd. Let's talk money with our friends. Welcome to the Money with Friends podcast. I am certified financial planner, Bobby Rebell, host of the Financial Grown Up podcast, coming to you from my very grown up kitchen in New York City. And I'm here with...
And I'm Grant Sabatier, creator of Millennial Money and author of Financial Freedom, coming to you from my attic in Columbus, Ohio.
Love that you have an attic. We don't have that here in condos in New York City. Here on Money with Friends, we talk about the latest personal finance headlines. We add in the insights and wisdom of our fantastic cast of thought leaders, including Grant Sabatier. We mix in questions and comments from our money friends, and we leave you with a takeaway to make it your own. Grant, welcome back.
I'm glad to be back. It feels like it's been forever, even though it's only been about a month.
It has been a month, but a lot has happened in that month because you now can share with us your big news. You sold your platform, Millennial Money. You sold.
Yeah, Millennial Money has been acquired by the Motley Fool, one of the largest personal finance brands in the entire world, that was founded in 1993. And it's so funny, of all the companies to buy Millennial Money, it's the one that's 5 miles from the house that I grew up in. And so I've known since I was a kid and loved the brand, very well respected company. And so it's been a long negotiation process, and I'm happy that it's over and to be deep in the trenches with them. We've now been working together for about a month and have a number of really cool projects set to launch in Q1 of next year.
Well, they put out great content and you can see them. I mean, they circulate all over the place. In fact, the story that we're going to talk about on Wednesday's show was in USA Today, but it originated on Motley Fool.
Yeah, the team, there's over 450 full-time employees at the Motley Fool, and even more writers spread out throughout the world. And so they have a 50-person investing analyst team. They've been doing this a long time. And the nice thing about them is they have a buy and hold investing strategy, very similar to the Warren Buffett strategy that we'll be talking about in tomorrow's episode. But it's just been fascinating to see their approach to investing, which is quite similar, but in some ways different to my own. And so it's been nice to dig into their philosophies. And I couldn't think of a better brand to help take Millennial Money to the next level. You know, as you build a website, once I was getting millions and millions of visitors, there's a lot of moving pieces that come with managing a website and a business that large. And I needed a partner if Millennial Money was going to reach the next level. And so happy to be working with them, and I've already learned an immense amount that I didn't know. They're really an incredible company, and more importantly, an incredible culture. And so happy to be working with them. And I have a call with them later today, and we are off to the races.
Well, that is all incredible. We are so happy that you are a part of our community here. Before we get into our story for today, let's see which one of our friends is going to bring us into that headline. All right. And today's headline is all about the election. We had to find a way to do a non political story, but something apropos and relevant for election day. And this headline comes to us. It is titled Stressed Out About Election Day. Stressed out about the election, don't take it out on your investments. It may be tempting, one economist says, to think of it that if your side wins, the economy is going to be all right. But no matter who wins, it may not be as good or as bad as you think. And it goes on to talk about different behavioral biases and people thinking that basically more dramatic. They're so stressed out, but really over history, elections don't have as much impact as we may think. Grant, what do you think?
Yeah, absolutely. So when it comes to investing, we're our own worst enemy. All the academics show that. Behavioral finance shows it. In many cases, we get in our own way. And even when we know what the right decision to make is, because of how we're wired, because of our biology, we tend to buy high and sell low and freak out. And, it's just one of those examples with the election where historically, when you look over the long-term, elections have very little impact over the performance of the stock market, and especially our ability to predict what's going to happen with the stock market. And so long-term investing strategies, if you're investing for 5, 10, 20, 30 years, your strategy really shouldn't change. And that's at the core part of the article, is that you want to keep to your financial plan and don't worry too much about really the news cycle in a lot of ways, because it's designed to get you to read more, to click more into read more websites, as opposed to actually helping you be a better investor. And so stay out of your own way, learn where you're going to trip up. And this is core to the best investors in the world, someone even like a Warren Buffett that we'll talk about tomorrow. Patience is important, and not getting sucked into that day-to-day news cycle and freak out. So play the long game, stick with your strategy, and don't get too distracted, especially going in to this election where it could be a crazy next couple of weeks.
And by the way, this piece, I should say, is in the New York Times by Paul Sullivan. One thing that I thought was really interesting in it is they go through the different biases that we can have that can impact how we feel about the stock market and how we get stressed out about our investments. So one of them is the extrapolation bias. And that's basically if you're feeling deeply pessimistic about your investments in the spring, even after the market rallied, you are exhibiting signs of what economists call the extrapolation bias. What do you think about that one, Grant?
Yeah, so the extrapolation bias, I mean, the simple idea is if something has been going well or something isn't going bad, we naturally think that it's going to continue. And so I liked how Paul actually talked about the recent increase in day trading and the growth of Robinhood, and how all these investors who started in April and May of this year, since the market's been so up, they probably think that they're all geniuses and that they're naturally going to continue. But eventually there's going to be that moment where the market does decline again, or individual stocks do decline, and they're probably in for a rude awakening. Whereas on the flip side, someone who's been investing for the long term and has seen ups and downs, they're still feeling the fear that came from the March decline. And so they might be sitting on the sideline with a bunch of cash. And so the extrapolation bias is simply that we tend to believe things that have happened to us will continue to happen over the long term, and we're not as aware of the changing forces, and realizing that there is so much uncertainty in everything in life, and especially in the markets, that we can't rely even on our own past experience to predict future returns.
He then goes on to talk about the availability bias. So the availability bias means the more you see information repeated, the more you think that information will be true in the long term without examining other potential outcomes. Grant?
Yeah, so this bias is pretty interesting, and it's people who tend to check their stock market performance and read about the market all day long, or watch Jim Cramer or CNBC, they get subject to this because they're getting all of this information. In a lot of cases, it's a lot of the same information at one particular time. So naturally, we know as humans that we're terrible predictors of the future. What's going to happen in the future is we're no better at it than just predicting whether it's heads or tails when we flip a coin. But we think that we're going to be better at predicting the future, that we know the future based on the information that we're consuming in any given moment. And so we tend to get wrapped up in it, and it impacts how we think about the future, and can protect ourselves. Really, we can't predict the future. And so the idea is to set a strategy, to stick with your strategy, but to not close yourself off from the fact that the world is increasingly uncertain, especially during this time.
And I love what you said about the fact that we all want to predict the future. Of course we do, because we want to be ready. We want to be prepared, at least many of us, people like me that like to always be organized, as you know. The next thing they talk about is the disjunction effect. That means people want information to be revealed before they make a decision, which to me is completely logical. Of course you want all the information you want. But here's the thing, with the disjunction effect, people want the information to be revealed before they make a decision, even if they would make the same decision with or without that information. So, in the case of knowing the election results, even if there's a clear victor next week, there's still a lot of unknowns about the upcoming administration that might affect investments. But people really feel they want that information first, even if they would make the same decision. What do you think about that one?
Yeah, and this goes back to that thing of, which candidate is going to ultimately be better for the markets. And so everyone thought that Trump would be, and that people didn't like Biden because Biden was going to, raise the corporate tax rates and the individual tax rates. And now on the flip side, Wall Street started warming to the idea of a Biden presidency because of less chaos and perhaps less uncertainty around the China trade deals. And so it's one of the things you can't win either way, because everyone's always changing their mind at any given time. The only certainty that we know is that over the past 100 years, the stock market over any 10-year period tend to be up almost 90% of the time, and over any 20-year period, it was always up. And so the stock market has always gone up and will likely always continue to go up as long as the American economy and ingenuity continues at the forefront here. And so this is one of the things where we tend to think that we're going to know the outcome, but we always want to feel like we're right and feel like we made the right decision. And this goes back to really kind of, I think, the most important topic in behavioral finance of all, which is loss aversion, which Paul doesn't actually talk about, but I think is very important because we naturally, evolutionarily, the way that we're wired, we fear losses and we feel losses more than we feel gains. And this makes a lot of sense when you think back to the Stone Age, when we're wandering around and, wandering that we're, and being afraid that we're going to wander off a cliff as opposed to finding a forest full of, apple trees. One has a bigger impact on our longevity than the other. And so we fear loss more than we appreciate gain. And so we all want to try to mitigate that as much as possible. And that tends to force us to make bad decisions and really get in our own way. So there's no way to predict the future. There's no way to know what's going to happen. And especially with an election, we just have to, I like, as Warren Buffett says, it's a sure bet to bet on America. And so I tend to agree with that moving forward, no matter who wins the election.
I like that. So then the article turns to, how do we actually fight against these biases that are really hardwired in our system? And it talks about going back to your financial plan, analyzing how a sudden drop in your portfolio value might affect you next year or 10 years from now. And that goes to what you were talking about the loss aversion bias. And, writing down, this is what they recommend, write down in a moment when you feel anxious, what you're thinking and feeling, and then return later when to see that maybe it wasn't as bad as you had feared. What do you think about that? What's your strategy when you get stressed out about investments?
Yeah, that's a great point. So I think it's important to note that we're our own worst enemies, and we're even worse enemies with ourselves when we're stressed out. And so here we are in a pandemic. We all have that lockdown fatigue. We all can't travel. Our lives look radically different. So put us in a microcosm where we're reading the news all the time and stressed out about what's going to happen in the future. And we're a little worn out and tired in our lives. And that makes for a pretty bad recipe relative to thinking clearly about our investments. And so from my standpoint, stepping away from the news as much as you can, having a defined time in the day, whether it's right when you wake up, and we tend to all look at our phones first thing. I do that. Read the news, and then give yourself a break throughout the day. Don't read the news. Don't click over to the news website. Stay off social media, and maybe check in at some defined point later in the day. But the more news that we tend to consume, our brains can really only handle so much information. And so naturally that feeds the stress more than it tends to help it. There's really not going to be many answers in the media. What it's going to do is it's going to ramp you up. It's going to cause a lot of anxiety. And so do a bit of a detox and consume media on your own terms instead of just throughout the day. That's Dan Ariely, the behavioral economist from Duke, the author of Predictably Irrational. He shared that on my podcast, and I couldn't agree more with that recommendation. Just stay out of the way, stay out of your own way, keep to your strategy, and then reassess maybe in a month or so after the election, and look at your portfolio. That'd be my recommendation.
That is such great advice. And I hope a lot of people do listen to it. We did reach out to our Instagram friends. At Muddy Friends Pod is our handle. So please follow us there and you can be part of our polls. We asked them, have you been tempted to make any investment moves tied to the election? What do you think they said? Yes or no?
I would say that 70% said no.
Oh my God, Grant, 69%. You were 1% off. Oh my God, you're so good at this. I think that's the record. I think that's no one's ever nailed it complete. That's unbelievable. We had a extremely high participation in this survey. What do you say to the 31% though that said yes, they're tempted to make investment moves?
I think the 31%, the market naturally, you look at the S&P over the past year, it's only up about 1.2%. And so there's been a ton of turmoil in terms of the market up, down, up, down. Relatively, equities are pretty expensive, historically speaking. But when you look out over the long term, I think there's people viewing this as a buying opportunity as well. And so I'm guessing that 31% probably bought some stocks. There was a discount in tech stocks over the past week. And so maybe they loaded up on a little bit of Apple or a little bit of Amazon at a discount.
Yeah, I'm not surprised that you have that theory, and it's probably spot on. I'm looking at some of the comments from our Instagram friends. We have, I think it's Clemmy Cakes, and she says, markets are down. I bought more. They're on sale, people. So you're spot on with that theory of what is going on. And we also have Kyle saying, if the market goes down significantly, I convert more money into my Roth. What do you think about that strategy, paying the taxes?
I mean, that's an interesting approach. Usually converting money to a Roth from a traditional IRA, that Roth conversion should happen in a year when you have less taxable income. So perhaps the market going down, fewer gains, I can see where there could be a strategy there, but there's a lot of variables at play in doing any type of a Roth conversion.
Yeah, let's get one quick comment because we're almost out of time. We have Tam Tam saying dollar cost averaging is the plan, and I'm sticking to it.
Yeah, I'm actually not a fan of dollar cost averaging in a lot of cases. So I tend to believe that investing early, often, as much as you can is going to be the strategy. Mathematically, lump sum investing, for example, outperforms dollar cost averaging generally. And so that's one of those things why I always recommend it, especially when you're young, front load your investments, make some of that sacrifice early on. And so you can have that compounding potential over a longer term. Of course, if you're making money consistently and you have a consistent income, dollar cost averaging is better than not investing at all. But I tend to believe that, especially beginning of the tax year, max out your accounts as quickly as possible. That's shown statistically to outperform over the long term.
And the truth is, if you do that, the odds of you actually pulling money out are probably lower than you having some unexpected event happen and then not finishing up maximizing your contribution. So I can definitely see the wisdom in that. Although I am a fan of dollar cost averaging because of its ongoing consistency. And I think it does help people psychologically when they are afraid that they're buying at the very top. It gives them that comfort level. But I think everyone can just think about what's best for them.
Exactly.
Hold that thought. We're going to get to takeaways in just a minute. But first, I want to talk about NetSuite. This is great if you're business owners like Grant is. I mean, look, running a business is tough. We heard about it earlier in the show, how it can be a little bit, well, it just becomes a lot as the business grows. So it's important to have the right systems in place. One great system we're big fans of here is NetSuite. So the great thing about it is you can stop paying for a lot of different systems that don't give you the information you need when you need it. You don't have to have all the spreadsheets and the old software that you've outgrown if your business is growing. So you can upgrade to NetSuite by Oracle, the world's #1 cloud business system. It gives you visibility and control over your financials, HR, inventory, e-commerce, and more. Everything you need all in one place instantaneously. Whether you're doing $1 million or hundreds of millions in revenues, that's you, Grant, someday. Save time and money with NetSuite. Join the over 21,000 companies using NetSuite right now. Let NetSuite show you how they'll benefit your business with a free product tour at netsuite.com/MWF. Schedule your free product tour right now. It is netsuite.com/MWF, netsuite.com/MWF. And with that, Grant, to you, your takeaway.
Stick with your strategy. Don't get too stressed out. We're already stressed out right now. Don't make any big decisions about your investments through the end of the year would be my recommendation. Stick with what has worked and try to limit your news consumption as much as you can. Focus on self-care. Get outside. Take care of yourself and let your money continue to grow and compound into the future.
What do you recommend as an alternative to news consumption on election night?
Oh God! Well, election night's one thing. I mean, you can make that a natural event. Although it'll be interesting to see tonight. If there's a clear winner early on. I think that's what everyone's going to look for. And if there's not, then in some of these states they're going to be counting ballots for 9 days. I think in North Carolina, and so it could be a while if it's a tight race. But we'll see. There might be a clear winner early on. So I give you a pass tonight. Watch the media. Stay tuned the next couple of days, but then give yourself a break if you can, maybe even through to Thanksgiving.
All right. Good thoughts. This gave me, let's go back to the whole getting stressed out about stocks in the election. This honestly, look, this gave me a lot to think about. And I like that. I like the fact that you gave me, reason to sort of take a second look at my bias towards dollar cost averaging. I think you made some really good points. And I think that's what we want. We want to be rethinking and coming at our decisions from different perspectives and bringing in different opinions. I think that always is useful in how we approach our money. And I think a lot of us are not necessarily consciously aware of the biases that we have, whether we admit it or not. I'm excited to hear more about what our listeners think. So I hope everyone will be DMing us at Money Friends Pod on both Twitter and Instagram, and let us know, whether you've made changes in your election, in your strategy because of the election, and also your tips about being less stressed out about all the politics that's going on, both on election day and also coming up, because it may be a rough ride, as Grant says. We may not know what's going on for some time. Before we wrap, though, Grant, I do want to ask you, what is your counter programming when it's not election night? Any recommendations for what we should be watching? Besides your upcoming TV show, by the way. Are you in production yet?
Not in production yet. In the planning phases. I encourage people to watch the election to see what happens. It's the ultimate sort of theater of our times. I think it'll be the craziest and has been the craziest election in my lifetime and probably my parents' lifetime. So no counter programming recommendations here, but schedule yourself a detox for the end of the week. Get out where the leaves are still nice, check them out, do some leaf peeping. It's going to get cold in a lot of places in the US, and stay outside, stay away from other people. It's the general recommendation. And the one thing I just wanted to add to your point, Bobby, that I think is important is, the idea that lump sum, investing is better than dollar cost averaging. This is kind of a good is often good enough when it comes to money, and it's whatever helps you stay consistent and feel good is often the best path. It's the same thing of should you pay down your mortgage or should you invest? Often people pay down their mortgage because it makes them feel better, even though mathematically the correct decision would be to invest the additional money instead. So it's one of those things where good is often good enough, and it's whatever helps you sleep at night. And so hope everyone has a good election night, and this has been a lot of fun.
Thank you, Grant. Where can people be in touch with you and hear more about all of your upcoming projects?
Yeah, best place is grantsabatier.com. So just search for Grant and try to spell my last name in Google, and it'll probably direct you to the right place. Been writing about a lot of topics there, and check out my book, Financial Freedom, if you want to learn a little bit more about the nuances of reaching financial independence at a young age.
Thank you so much for being with us, Grant. You're going to be back on Wednesday. We're going to be talking about Warren Buffett and the stocks that he has held the longest. We'll also reveal the results of our Money Friends poll. I'm sorry, we did a quiz, and we'll see if our Money Friends guessed it correctly. So we'll see everyone tomorrow. Thanks for joining us.
Bye.
All right, that was an awesome show. Thank you, audience, for being here. You guys are a little quiet today, but Dave, thanks for saying hi. And all right,
we're getting that rhythm.
Yeah,
got that rhythm going.
That was good. No, but you look, you really did, because I'm always like dollar cost averaging, because I'm always paranoid that I'm going to miss the big drop or what, you know what I mean? I like automation for just make sure the money goes in, cash flow wise. But yeah, there's definitely something you said for like load it up and that way it gets done. If you have the cash, not everyone does. That's the truth. Not everyone has the money to fund. I think are we up to 19.5 for 401ks? Something like that. Yeah, that's a lot of cash. Not everyone can write a check for that. It took me a long time in life just to be able to do that max, not just the match for the company, to actually put in the maximum amount. So, whatever. Everyone does their best, but I like the point that you made at the end that, and it goes to paying off debt too, as you said, that you can tell people the math, but at the end of the day, psychologically, whatever's going to get it done is better. All right. So this is going to be show number 2. This is for Wednesday, November 4th. The world could look so different then. Okay. Hey, money friends, want to invest like Warren Buffett? We are revealing his 11 longest held stocks with the creator of Millennial Money and the author of Financial Freedom, our co-host today, Grant Sabatier. It is Wednesday, November 4th. Let's talk money with our friends. Welcome to the Money with Friends podcast. I am certified financial planner, Bobbi Rebell, host of the Financial Grown Up podcast, coming to you from my very grown up kitchen in New York City.
And I'm Grant Sabatier, author of Financial Freedom and creator of Millennial Money, coming to you from my attic in Columbus, Ohio.
Here on Money with Friends, we talk about the latest personal finance headlines. We add in insights and wisdom of our fantastic cast of thought leaders, including Grant Sabatier. We mix in questions and comments from our money friends and leave you with a takeaway to make it your own. Grant, welcome back.
Glad to be here.
We are recording this before the election. It will come out after the election, so the world could look very different. But we're not going to talk about it at all for that reason. We're going to talk about the long term now. We're going to go as macro as you can, and we're going to talk about Warren Buffett and the stocks that he has owned the longest. And the longest one is over 3 decades, which is crazy. We also, by the way, we did a money quiz on Instagram. I hope everyone's following us there at Money Friends Pod. And we'll reveal how our money friends did, because we asked them which one of 4 stocks they thought Mr. Buffett had owned the longest. How do you think they did?
I think they did well. I'd say 90% answered correctly.
I think so too. We'll see. But anyway, Grant, welcome back. You have a lot going on, so I'm glad you made time for us. Tell us a little bit. Give us an update.
Yeah, so as we talked about in yesterday's show, Millennial Money recently got acquired by the Motley Fool, the personal finance brand. And so I've been busy helping transition the website over to their team and working on strategies for 2021. And so there's a number of products that we're developing for the website and for the platform. So that's kept me busy. And I have a television show in the works. And so I'm working on that. And I've also about a quarter of the way through from in my second book and writing my second book. So have a lot of projects still in the works, and now I'm starting to plan for 2021. Hopefully we can be able to travel again, because that's something that I love to do. And so I'm going to be out in California in December and January. Excited to get out of Dodge a little bit, and so planning that. And just what a year it's been, just in the world and in my own life. It's just been so remarkable. So kind of starting to wind down a little bit, and just take a little time off as well.
That's definitely a good thing to do, especially as we get towards Thanksgiving and the holidays. I think we all need a little bit of a break. On that note, let's see which one of our friends is going to lead us into today's headline. All right, and this comes to us in USA Today, but it is really written by Sean Williams at The Motley Fool. It says, take a peek at Warren Buffett's portfolio and his 11 longest held stocks. And it talks about the fact that Berkshire Hathaway CEO Warren Buffett has a knack for making himself and his shareholders a lot of money. Since 1965, this is pretty impressive, Berkshire Hathaway stock has averaged a compound annual gain of more than 20%, which works out to an aggregate gain of 2,744% over the past 55 years. Whoa. Suffice it to say, he might know a thing or two about investing. And then it goes into his 11 stocks, and we're going to kind of go through them quickly and have a little comment. And I'm going to ask Grant what he thinks, and then we'll reveal how our money friends did. So the first one was Coca-Cola. And I feel like he's very identified with Coca-Cola at this point. It's kind of everything he's about, right, Grant?
Yeah, absolutely. I mean, he drinks like 5 cherry Cokes at the Berkshire Hathaway annual meeting during like the 8-hour question and answer period with Charlie Munger. So Coke is without a doubt so identified with Warren. He's a big fan, and he's one of those guys I've always appreciated. You know, he's just like a little kid at heart, and he's invested in all these companies. You know, from buying Dairy Queen to Coca-Cola, and sees candies, these things that 7-year-olds like, and it's worked extremely well for him.
Yeah. And by the way, and have you ever met Mr. Buffett, and have you been to his shareholder meeting? Are you a shareholder at all of Berkshire Hathaway?
I am a Berkshire shareholder, and I did go last year. I've only been to the meeting once. I was given tickets, even though I could have gotten them myself, on my book tour. Fortuitously, I was driving through Omaha the day before the meeting, and so was able to get passes and go with some friends. I've never met Warren myself. I was a couple feet away from him, but big fan. And I actually have Warren and Charlie Munger bobblehead dolls right there on my bookshelf.
Oh my gosh!
That a reader sent me, which I appreciate. So more than their investing philosophies, I appreciate their life philosophies, and so I like the way they think about life. Charlie Munger's his almanac, which is written about him and his wisdom, is one of my favorite books. And then, if you haven't seen Becoming Warren Buffett, the documentary on HBO, it's an all-time favorite. Warren's just an incredible thinker, and everyone can learn a lot, even if they're interested in investing or not, from how he views life.
Very interesting. I have not seen that. I'm going to check that out.
So
great.
good, so good. It's so good.
All right. So going back to Tuesday's show when I was looking for recommendations. So we all hopefully did watch election night coverage, because that is a historical moment. But when you're done with that, if you're looking for counter programming, everyone, go watch the Warren Buffett documentary. Okay. So the second one, this actually surprised me that he has stuck with this stock, because it's been controversial, and that is Wells Fargo. He's held it for 31 years. It's a bank, for those of you who don't know. They've had it since 1989. The article is pointing out that there has been selling activity in the stock. So he still owns it, but maybe he's not going to own it much longer. We're not really sure. What do you think?
Yeah, I mean, you can't hit a grand slam with all of your investments, especially ones that you hold for, over 30 years. And so, Wells Fargo is one of those companies that when Warren invested in it, and as Warren was investing in it, was the biggest bank in the United States, an incredible company, an immense long history of innovation and customer service. And so it's one of the things from an investing standpoint that he couldn't have seen because from a foundational investment standpoint, it had everything going for it. And it's just one of those things where I do think actually Wells Fargo, under the right management over the long term, will recover some of its greatness. The problem is it's lost so much ground to chase over the past several years, and it has a brand reputation problem. But it's an investment that I actually see Warren holding for the long term, given his cost basis is likely quite low in it, and he's held it for a long period of time.
That's a very good point. It'll be interesting to see, if tax changes, if there are tax changes, if that impacts his investing, because you do mention that he has a low cost basis, and that, of course, impacts how much it would cost in terms of taxes if it were to be sold. The next one is American Express, 27 years. And the piece points out the fact that it's what they call a double dipper. It not only collects fees by processing payments for merchants, but it also acts as an individual and corporate lender. So it's collecting interest on the monthly balances that people may have on their credit cards, and also obviously cardholder fees. So American Express has been a really solid holding for him.
Yeah, absolutely. The question is, can it continue to perform? Obviously, in the pandemic, American Express cards are so linked to two things that have been hit incredibly hard. Number one, business travel, and number two, travel in general. And so those two things were kind of at the core of American Express's business model, and they've been hit particularly hard during the pandemic. American Express is a company that, as a millennial, I just really don't get and understand, especially as credit card companies have, Chase, other brands have released credit card benefits that rival, or in some cases are even superior to, American Express. So I don't see American Express being a strong millennial or younger investing brand. So I think that's going to cause some headwinds into the future. And that's one of the big questions with Warren Buffett. He knows the companies extremely well, but we've entered a new era. It was nice to see Berkshire Hathaway buying some Amazon stock, even though Warren wasn't the one who bought it. And naturally, you see them moving towards some tech investments that they've shied away from, or he's shied away from historically. American Express is one of those companies that, personally, I think MasterCard or Visa is likely a better investment. Chase is a better investment, but who am I to argue with the greatest investor of all time?
And again, these are his longest held holdings. They're not necessarily his largest holdings, and they're not necessarily holdings that he will continue to have. And we don't have the information here whether he's maybe pared back on the holdings. So that's all, this is just the longest holding. So moving down the list a little, we have M&T Bank, 24 years, Moody's, 20 years. And then I want to talk a little bit about Costco, because this seems like something that was a little bit ahead of its time when you think about what's been happening lately, is the Costco and the membership model.
Yeah, Costco's an incredible investment, and it's one of those perennial examples of a visionary CEO and a visionary leadership. And so it's the same case with like investing in Amazon, 20 years ago. You look at the founder, you look at what they're doing, you look at what they're trying to do, and you invest in the founder and the management. Costco is the perfect example of that type of a company with a big vision. And were they going to actually be able to pull it off and differentiate themselves from the other sort of big box discount retailers? And what they've done incredibly well, probably better than any company in the United States, is executed on their vision. And so the stock and the business really speaks for itself. I'm a huge Costco fan. I actually wait to fill up my gas at Costco when I go because the cost savings is so great. And so incredible company. He was able to see that very early on. And I see him actually maybe buying more of Costco and doubling down on it into the future.
Moving down the list, we have Globe Life, which is an insurance company. So a lot of insurance companies do very well. It's something that he's invested in a lot, that sector. We then have Procter & Gamble and Johnson & Johnson, both of which have a lot of consumer products. So that's been something that's been a big winner for him, because, even in tough times, you talk about Procter & Gamble, people are still buying detergent, shampoo, toilet paper, toothpaste, all of these things, right?
Yeah, the staples. I think Warren looked at one point, what are the things that Americans love, and what are the things that Americans need, and what are the best companies in those areas that I can invest in? And he clearly holds a number of them, and Johnson & Johnson and Procter & Gamble are two prime examples where they have such diversification across their product mix and have such reach. I love this example in the Warren Buffett documentary. He actually talks about there's like an insane amount of Coke sold all over the world, and if you just increase the price of Coke products 1 cent, you make like more, $8 billion more in revenue for the year. And I think the same example holds true with the Johnson and Johnson
Yeah.
and Procter and Gamble. Raise the price a little bit, and that gives you an immense amount of scale, which you can make money on with just simple price increases. And so those staples actually benefit from the consumer price index and natural increases. And it's not like people are going to wake up one day and stop buying Clorox wipes.
Exactly. Well, certainly the consumer staples in general. I mean, obviously, they have to be mindful of their brands and marketing and make sure someone chooses their product versus a competitor. But certainly, those staples are going to be constantly in demand versus more discretionary products as this pandemic continues. And speaking of benefiting from the pandemic, I mean, UPS, he's owned that for 14 years. I mean, consumers and businesses shifted so much activity online. So this is about logistics. This is just a moment for UPS right now. And he's owned it 14 years. It's not like he bought it in March.
Yeah, and I'm surprised he doesn't own a lot more of it, actually. Even though he's had it a while, it's a relatively small, very small percentage of his holdings. And so the question that the article appropriately brings up is, he's held it for so long. Why does he have such a small position in it, given the industry? But obviously UPS. It's funny that this episode has turned into like what stocks do we like? What stocks do we not like? And I've never talked about this ever before, but now Motley Fool buys my website and there's a Motley Fool article and I want to dive deep into the individual equities. It's pretty funny how that works. But I think UPS is an amazing company. Obviously, I could see him expanding his position on it over the long term. And it's going to be interesting. On a side note, this holidays, I don't know if you've been reading at all about how a lot of UPS and FedEx, they've already locked up their shipping. And so they're telling a lot of companies that they can't help them ship. And so a lot of big companies now are scrambling with how to get their products out to consumers. And so I see UPS, FedEx, just sky's the limit for them, especially in this now acceleration of the e-commerce era.
Yeah, absolutely. And it's good at least that they are being realistic. I like the idea that their communication systems and their infrastructure is such that they know when they're at capacity, because I think that's important to manage customer expectations, because we have gotten used to so much on demand that this holiday season is going to be so different. It's something we've been talking about a lot on Money with Friends, that if you want something very specific and you want it in time for the holidays, it's unfortunately no longer a game of chicken with waiting for the right price. It's get it now or you may not get it. If it's that important to you and if it's in your budget, you need to just make that decision. And that's a whole new mentality for so many people. So UPS is really benefiting from the fact that shipping has become a topic of discussion. People don't take it for granted anymore. And that puts more value on being able to consistently deliver. And when you know you cannot, having the infrastructure to flag it in advance and communicate properly with your customers what is going to happen. So I think that's also really good. The final longest holding of Warren Buffett is U.S. Bancorp, which is a regional bank that's had really consistent return on assets during periods of economic expansion. You can tell I was reading that directly from the article. More than half of all the loan sales, this is what is interesting though here, and you talk about the future and banks that are positioned well, more than half of all their loan sales are originating from mobile and online transactions. So I think that's interesting because it allows them to be less dependent on paying rent on physical branches.
Yeah, and an interesting thing about U.S. Bank too is they're kind of a conscious company in terms of how they lend money and how they work with consumers. And so it's funny how he has both Wells Fargo and U.S. Bank Corp that couldn't be more polar opposite in terms of the spectrum of conscious consumer focused brands. And so it's interesting to see that he holds both. Clearly is a huge fan of the financial services industry and knows a ton about it. And so I that's pretty much all I have to say about U.S. Bancorp.
All right, let's move on to how our audience did on our quiz. Okay, so this was the quiz we asked at Instagram, and I hope you guys, if you're not already there, please join us on Instagram at Money Friends Pod. Which stocks has Warren Buffett owned? Which stock of these four has he owned the absolute longest? Coca-Cola, Costco, American Express, and Wells Fargo. They were all on the list, but of course, we all know now the answer was Coca-Cola. And the good news is that yes, as you predicted, Grant, by a huge majority, Coca-Cola was the first choice. And to their credit, the number two, the one that came in second, as people thinking it was the first one, but still was actually the second one, which is Wells Fargo. So they kind of had that idea. They were only a year apart. So they had the idea that Wells Fargo was also way up there. And then the next came in next was Costco and American Express pulling up the rear, but those were further down the list. So big credit to them. Of course, it was an open book quiz. So,
exactly.
but please join us on our Instagram. What's your Instagram, by the way, Grant?
At millennialmoneycom.
Awesome. All right. Hold that thought. I'm going to talk to everybody about how I organize my business finances. And then we're going to be back with our takeaways. I personally use FreshBooks. Keeping track of money. This is so important. And I found when I started my business, I was really busy with the business part of it, but then I had to actually bill people and send out invoices and all those things and then track, did they pay me yet? Do they need a reminder? All those things that just always were taken care of before. I mean, I used to just get a paycheck from my corporate job. So to do that, I literally set up FreshBooks right when I started my business. And actually, technically, I set it up before. I wasn't really using it because I didn't have income from my business yet, but I set it up when I still had my TV anchor job at Reuters, and I just had that idea for the book. But it's been so easy. I can invoice clients, and even more important, they now have ways that I can get paid faster. And I love that it also connects it to my business banking. That made it so easy when it came time for taxes. Everything was right there for me. It also helps me see where my spending is for my business and where my income is and how I'm doing. So anytime I'm feeling a little stressed out about my business, I can just go into FreshBooks and I can see exactly how I'm doing. So we have a special offer for our money friends. If you go to moneywithfriendspodcast.com/FreshBooks, you can get 60% off the first 3 months when you sign up. The URL again is moneywithfriendspodcast.com/FreshBooks. You get 60% off for the first 3 months when you sign up. And guys, I personally use this. I love it. If you have questions, you can DM me and I will be happy to share whatever knowledge I have and any more information about my experience that you want to know on Instagram at Bobby Rebel 1 or also at Money Friends Pod. And that is also our handle on Twitter at Money Friends Pod. So be in touch if you have questions, but definitely check out FreshBooks. I love it. It keeps everything in order for me and definitely made tax time so much less stressful. Grant, time for takeaways. What are you thinking?
I think it's Warren Buffett, the key of this whole article is that if you want to be the best investor of all time, you want to hold your investments for a long period of time. And so it's no secret that Warren Buffett is a buy and hold investor. That's at the core of the value investing philosophy. And so even some of these timelines, when you think about UPS, 14 years really isn't that long, especially when I think Warren Buffett just turned 90 or almost 90 years old. So Warren Buffett invested in UPS at 76. And so one of these things is it's also important to remember that Warren Buffett, I think at the age of 65, was only worth like $500 million. And so he's become a billionaire in his latter life because of the power of compounding. And so that's one of the things: buy, hold, let money grow, let it keep growing. To the point of our show yesterday, don't let the news cycle distract you or, get out of your own way. You are your own worst enemy. And I think Warren Buffett's the one who said, something to the effect of, you don't get penalized for the shots that you don't take. And so that's one of those things where no one's forcing you to buy stocks. No one's forcing you to sell stocks. You actually are in control of your investing life. And that's why, he'll wait years sometimes waiting to invest in a company. And I think he's sitting on like $120 billion or more of cash because he's waiting for that right opportunity, even at 90 years old. And so there's no rush here. Patience really is the key word when it comes to investing.
I love what you say about patience. I think that's so important because we all want this instant gratification of buying a stock and then like watching it go up, 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 up. And that's not always the way that it works. If you're looking for value stocks and you're looking at what a company is really doing and their business plan, you can see UPS is a great example that they were, tied into a business that was going to be growing and will continue to grow by all predictions. And he saw that 14 years ago. You also said earlier in the show, it's not his biggest position. So that's also interesting. Just because he's owned it the longest, he's dipping his toe in, but it doesn't mean he goes all in necessarily. He's cautious, he's patient, he's thoughtful in what he's doing. And I think that's all important takeaways for us to have. I also think that it is industries, if you see, there are definite patterns. It's consumer products, it's finance and insurance, things that he understands and things that he believes will be long-term consistent businesses. Of note, we did say this, but I want to repeat, this is not his biggest positions and it is not his best performers. It is his longest held holdings. So take that into consideration if you are looking into adding this to your portfolio. Grant, before I let you go, where can people continue to be in touch with you and follow all of your projects, including this TV show, which I'm so curious about, and your next book? What's your next book about? Can you tell us?
So my first book was my journey from 25 to 30 when I went from $2.26 in my bank account to reaching financial independence. And my second book is actually my journey from 30 to 35. And so after I'd reached financial independence, I realized that freedom meant something very different than I thought it had meant. And I actually had to spend some time letting go of who I thought I was. So there was new space to become the person that I was yet to become. And so it's part money book, but more life book than anything else, and about my experience during that journey. And so one of the kickers is I have a lot more time to write this one than I had the last one, and so it's naturally going to take me longer. And it's like anything in life, we all continue to change and continue to grow, and so trying to get those thoughts down on paper as they're happening is a particular challenge. But if you want to follow along on the journey, just go to grantsabatier.com and subscribe. And I share my deepest kind of thoughts on money and life in a newsletter there, and will continue to as I travel this life journey with all of you. And it's just been a lot of fun here, and really excited for 2021 more than anything else.
Yes, I think we're all counting down to 2021 for sure. If you guys want to learn more about Grant as well, you can see more about him and all of our thought leaders on our website, moneywithfriendspodcast.com. And please follow us on Instagram and Twitter at moneyfriendspod, and be part of our live show tapings. We are on YouTube. Just search for Money with Friends on YouTube. You can also see the full show tapings with us on camera there, and see more about what people were saying in our live studio audience. So please join us and subscribe and set the reminders on our YouTube channel. With that, thank you, Grant. We'll see you back in about 4 weeks.
See you then. Bye, Bobby.
All right. Thanks, Grant. All right. Great show. Thank you to our audience here for joining us. I will be back on Thursday morning with Joe Saul-Sehy, and I believe Joe is taping with Farnoosh on Wednesday. I should have said that he'll be here with Farnoosh. I forgot to say that on the show. But anyway, guys, thank you for joining us. We'll see you all soon.